What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. I am getting buy signals, not just on equities, but also on crypto. Sorry that you'll hear me slur every once in a while. I have some stitches. Today's episode is brought to you in partnership with FTX. More on FTX later. Let's go ahead and get into today's show. All right, everybody, welcome to the market dashboard. We're going to go ahead and start off looking at the 11 sectors and the indices performance today. So pretty much right across the board, and the VIX there was slightly up. Not too big of a move on the VIX, so we'll take a look at those charts here momentarily. Now, what I do find interesting today is that energy was up wildly, but you know, when you look at the three horsemen here, which is consumer discretionary, technology, as well as financials, those were deeper in the red. Now, earlier in the day, we saw a lot of these move up other than financials, but then all of a sudden, intraday, they started to roll back over. Now, big moves took place today in the bond market. So the reason why financials didn't do so well is because, well, the TNX started to move down. Meanwhile, the bonds caught a nice big bid here, coming right back up into that 131 range. We'll see here if there's some continued momentum here, which could put pressure on financials. Financials is going to be incredibly important to watch. I do not have a chart of financials, but what I will share is if you pull one up on the daily time frame, it pretty much looks like this. Up, down, up, just like that. And now I'm wondering if it's going to go up further or if we're going to head down a little bit. But it's been very aggressive moves to the upside and downside, which could mean potential distribution. Now, if you take a look at oil, oil's been making some massive moves. Today it was up 5.18% to the upside, which definitely helped out the energy sector and may have put pressure on various other equities. So the energy sector benefited today. However, as you can see here, just massive amounts of volatility to the upside and the downside too as well. So we'll see here how that resolves. Keeping a close eye on the dollar is still trending sideways here in this flag formation. It didn't do much today and the market did roll over. So if this falls down to the downside, we'll see here if that just also makes the S&P 500 potentially consolidate or reverse course and start to head higher. Now, if the dollar starts breaking out of this pattern and we see some sort of a flight to safety like we saw today in bonds, that could very well push the S&P 500 further down. Now, we'll get into that chart here momentarily, but let's take a look at some of the volatility charts. Volatility, you got to wonder. So the bears have potential to step up here because, you know, we saw a pretty wild day in the markets, but volatility remained rather quiet today. So if we start getting back above that 24 level, that could very well shoot us up potentially higher there. VXN, which is Nasdaq volatility, very same situation, as well as Russell volatility too, just up slightly, and you can see it came off just a little bit slightly too as well. Still elevated levels. Let's go ahead into all right, everybody, welcome back. We are looking at the Saylor to Schiff ratio right now, and we got that buy signal, and we have a confirmed buy signal. The price of this week candle got above the price of the previous high, entered in there, so all is well. Now I just sit back and wait for the next sell signal. Hopefully the next sell signal comes when I'm in the green. Here is a chart of Bitcoin on the daily time frame, and you can see expansion contracting, and now we're right there, right about that upper resistance. So my question here is if we're going to start to break out now, or if we're going to come down and contract even further. Remember, expansion leads to contraction, contraction leads to expansion. So we're right there at the brink of a potential breakout, which could be good. Always be mindful that you got to manage your risk. Just because we break out doesn't mean that it can't be a fake out. Ethereum, very same situation, butting up right against that area of resistance and in that same pattern. Understand the context of the chart is still rather bearish, but we are getting those activated buy signals, which is a positive thus far. Let's go ahead and hop into the indices. Okay, so the SPY down on the day about 1.29%. We're back there at around the 200-day moving average. I'm going to be bringing up in the conclusion a picture of the S&P 500 on the looking at the SPX, not the SPY, because I think it's going to be an important one to watch. Now, as you can see, we're relatively flat on the week, so there's still a lot of volatility that can happen in coming days. Like I stated earlier on the VIX chart, that is going to be one to watch. If that starts bidding up, that could force us down further. Now, this move was a very aggressive move. So to see a 50% retracement of the move would bring us to around 435, which is right there at the lower risk range that we discussed on the weekly recap. So if that is the case, that could just very well be a flag pattern, and we could watch something like that happen. If that does happen, there's going to be everybody and everybody most likely will be talking about a possibility for a inverse head and shoulders. So that is one thing that I'm watching. That's if we get continued sell side activity here. 15-minute time frame right here. You can see 5-day moving average is inclining nicely, and we're pulling back into it. This could be a potential buying opportunity, but I'm going to get into the signal charts here, which could represent a potentially more downside to come. So when I look at this chart, to me, it looks like we can very well tomorrow have a lower high and a lower low. What would that look like? Well, maybe we come back up a little bit. That would be a lower low or a lower high to the previous high, and then a possibility of a lower low there too as well. So up here we've been calling higher highs and higher lows. We've been getting them. Now I'm starting to see a little bit of weakness, which could result in a lower low going into tomorrow. We shall see. All right, let's go ahead and move to the Qs. The Qs above that 5-day moving average, negative divergence started playing out, and we're still above that too as well. Understand, just look at the volatility here in the 15-minute time frame. It's just a lot of chop back and forth. So what I've been saying is I wouldn't be shocked to see it come back to the volume shelf profile or the middle of this trading range that it's been in. So is there more downside to come? I think that is very possible, and I'll once again show that on signal charts. On the IWM, I'm only going to go on this one because my mouth is actually kind of starting to hurt right now, and then I'll hop into the signal charts. But we are still right there, rather, on the lower end of this risk range. If we come down to the 50-day or 20-day, that might be an opportunity to buy the dip because we would be coming into the lower risk range. I would like the risk to reward there. Now, this is why I'm not getting too excited about buying the dip right at this particular moment. You're paying attention to these buy signals, right? We talked about a couple buys, or one buy signal so far. We got it in Bitcoin, but there's also another signal chart giving me a buy signal as well. So let's hop into the signal charts. First and foremost, we're going to look at BP charts. I like to look at these for positive divergences, negative divergences, and overextensions, which you'll notice here on all the BP charts. If you look right here on the RSI, they're going to be moving into overbought territory. So that is the Nasdaq. Oh my gosh, I'm sorry. My mouth is really hurting right now. I'll try to finish this up. The Nasdaq Composite, the S&P 500, overbought. The BP NDX, overbought. Industrial average, overbought. I'm so sorry. The SPY right here is also, this is looking at the trend indicator. I posted on this on Twitter. If you don't follow me there, you can follow me there. But when it gets to this lower level, I smoothed it out with the 10-period moving average. And when it reaches down to the, oh my gosh, I'm sorry. I might need to cut this one. I might need to cut this off a little bit early here. Let me regain myself for a second. Whew. Okay, here we go. When it comes down to this area, we've seen weakness in the market. And as you can see, the red vertical lines, that is what's giving that indication of a possible weakness. And we just recently touched it, which could indicate that we might have further downside. I also look at this ratio right here. You can see it's put in a higher high and a lower high. Last times we've seen that was right here and right here. And the S&P 500 did go down shortly thereafter. Okay, another thing to watch here is the housing index. I've been talking about this quite frequently. I'm not going to dive too much into it now just because of my mouth, but we did see a pretty severe move to the downside. This has been put in a lower high, and this put in a higher high on the S&P 500, which could indicate some more further downside as well. Now, this is where I got the buy signal, the CPC ratio. So it crossed down below that 0.95, so that is a buy signal. However, when I look at all the other various indicators being overextended, I am a little hesitant right now to just jump right in. So me personally, what I would like to see here is first and foremost to see price consolidate or pull down a little bit, and then I want to go ahead and act on a buy signal. So these aren't the holy grail. It could very well turn around and start rocketing up, but you got to respect the other signals and you got to look for various ideals. So as it stands for me right now, I could look really stupid, right? But I'm going to go ahead and ignore this current signal, and I'm going to give the market more time to digest its recent current move. Okay, that doesn't mean that you need to, but that is just something I'm watching. Now, I can also pair this with the old fool indicator. And as it stands right now, we actually haven't had it cross back up through yet. And when it crossed down, we saw market weakness. When we see it cross up, we can see some market strength. So that is one thing also to pay attention to. All right, everybody, that wraps it up. I want to show you one more chart and we'll kind of conclude it. So this is the S&P 500 on the daily time frame. And I wanted to just point out we are here on the SPX. It did get back below that 200-day moving average. And you can see the MACD here. You know, I was watching this pattern right here and we broke out to the upside. There is one trend here. If you connect this to here and bring it down, this is starting to, the histogram is starting to die off slightly and potentially curl over. So this could mean that the move right here is going to just consolidate and or digest. So what I've been saying was, if that is the case and we see some further downside, this is a left shoulder, this is a head, and you'll probably have more people. If this is a 50% retracement, right, it can potentially form another shoulder. So that'd be one to watch. And then everyone's going to be keeping an eye on this breakout area, which would be, you know, right around that 4,500 marker. Now that, you know, may or may not happen. It's, you know, we don't know, but that is a scenario that I'm watching for at this particular point in time. If you want to look at another case scenario, you can just simply look here. And even if it doesn't do that or goes sideways or starts breaking out, that could indicate that there is some further upside to go here. Now, keep in mind, a lot of bear markets, they have bear market rallies. And we did see, this is a big market rally right here. And I know it's sucking a lot of people in. I see it everywhere, right? But we don't know if it's going to get faded yet or not. It's still early. I mean, it's still not even the second quarter yet, as growth is going to be slowing down. We are walking into a tightening cycle. And, you know, bear markets do this kind of stuff. So as it stands right now, we have a high, a lower high, and right now a lower high. Okay, we did try to get above this one, but keep in mind the bigger context there. Then we have a low and a lower low. And what I've seen in bear markets is you can see sometimes 3 waves down. So if this is one wave, this is 2 waves. You might call that a third wave, but you never know. And this could be another third wave. And the way that I would see that is because you get a huge move, then you get the move to the downside. Then you get a huge move, then the downside. Now this was a huge move, and that could be the downside. But this move, that was a huge move. Okay, so it's something to pay attention to. I personally want to see it consolidate and wait a little bit longer before I just load the boat. So I'm just being careful and tactical in this environment. Hope that helps and have a wonderful night.